I'm kind of pitching myself here as somebody who's an experienced investor, but always, I'm definitely new to this business as well. I just want to speak about this product and just how much, it has really helped me, propel myself, get better with talking with sellers, actually be able to close a deal. My strategies right now have been primarily direct mail, cold calling, and cold texting. And I've found a lot of success with Real Estate IQ, especially being able to get in front of customers, have engaging conversations. And of course, I'm hoping to use all of that to build my own business and eventually retire off.
Excited to be here, and I want to say a big thank you to Real Estate IQ. They have the absolute top leads in the industry and just make investing effortless for all of us as real estate investors here in Texas and obviously everywhere else that they're focused. And I'm proud to be associated with Real Estate IQ. Love what you guys do and love how you all help investors so that we can focus on the thing that makes us the most money, which is the job of real estate investing.
I wanted to jump on this morning and give a shout out to Real Estate IQ. I began my journey with them a few years ago, just using some of the more basic products, the off-market leads. And since then, growing and visiting and talking with not only Steve, but other people who are involved with Real Estate IQ, I've had the opportunity to actually not only be a client, but I also became an investor with them. And that is one of the beauties of being able to be part of Real Estate IQ, is it gives you the opportunity to grow as an investor, especially in real estate.
Hey, welcome everybody. This is another week of our Deal Makers Live. Today, the meeting is going to be a little bit short. We're going to go over some market updates, some deals, and then we're going to end relatively quicker. All right, so, Real Estate IQ, the host organization, right? The distress motivated seller leads are, basically what can power a consistent pipeline and deal flow for your real estate investment business. We have tons of successful clients, and we also have experience using these leads ourselves. And that's what powers when you have a consistent lead flow is when you can get a consistent marketing and deal flow. Make sure you visit our website on a regular basis. We update our website very regularly now with the market updates and the deals. So if you miss anything from this meeting on our market update, you'll also find some of the content on the website as well. All right. Okay, so a couple of market updates we have. Like these are really, really fresh. Some of the data was really just released today. First off is the labor market number. We saw a new jobs have opening. We're looking at 130,000 new jobs versus 55,000 expected. And over the actual of December, which was 48,000. And unemployment rate is still, relatively high, although it is still less than what was expected at 4.4%. Now we also see a unemployment numbers that's a new number, and that was at I believe at oh, look at this. So, okay, let's advance here. The inflation is shifting closer to the Fed's target. CPA has risen 0.3% month over month, and year over year, CPA has slowed down to 2.7. And again, comparing to the 2.5, compared to a 2.7% forecast. So we're seeing the inflation has slowed down. And housing activity is soft, along with retail sales has also gone flat. So existing home sales came in at 4.15 million, which is below the 4.35 million forecast. And in December, the retail sales were flat versus a 0.4% forecast and a 0.6%, which is what was prior. So we also have some featured deals here for you. This is a sub-2 deal in Waco. If you're looking for a wrap or like a long-term rental, these numbers should work. We're looking at properties in the Central Texas area. This is also in Central Texas. It's about 30 minutes from Austin, and this is a subject to deal as well. There's also a 35 single-family rental portfolio. Most of the properties are in DFW. We are also getting some inventory in Florida now. So I think the properties in this portfolio, it's perfect for those that are looking to acquire, your next rental property to add to your portfolio. Or if you are looking for a bulk purchase, so the seller is willing to seller finance a part of the purchase. If you're interested, scan the QR code and request for this information, and we'll chat with you and kind of qualify you, make sure that these deals are the right match for you. Okay, a couple of promotions that we got going on. Valentine's Day is coming up, and we have our promotion happening. If you scan this QR code, you can talk to one of our consultants to learn more about what this promotion is about. And so far, we have seen quite a few folks taking advantage of this promotion already, so don't miss out. Here's the QR code again. Now, some upcoming events for everybody. So here we have, we just had a very well-attended class on hidden gems on Wednesday. If you missed this one, you can try to join next week. And tonight we have pre-foreclosure gold mine, Friday and Saturday as well. You know, these are educational classes. And then tomorrow we have a couple of live events on the right. We have our office hours and our Friday open house. Okay, if you scan that QR code, you'll be able to attend. We have an in-person event as well in Dallas on next Friday, basically February 20th. There's also a QR code here you can scan and join. So that's all we have for you today. I'm not sure if John is able to join us and speak here.
Yeah, I am, but my camera has problems. So,
hey, welcome.
I actually dressed up for today, but you're not gonna be able to see me, guys. Long time no see.
I think your voice is great too. I'm gonna pass the mic to you if you could talk.
Yeah, absolutely.
Thank you.
I'm gonna give the updates on the economics and what is going on with basically around us with the economy, with some of the noises that you probably heard in the market, so on and so forth. So for those who not only invest in real estate, but also put their efforts in saving for their retirements, for kids' educations, going to college, or saving up for maybe having more fun. Well, this is probably timely. But before I go into the economic updates, I do want to share with you a model, a golden triangle model that you all need to have on your mind. So when we talk about investment, we talk about primarily three parameters. Return, of course, we want more returns, right, for little money. That's why we're doing some of the wholesales, right? Otherwise, you can just buy a house and lease it out for a long-term rental, right? In a second, we're going to talk about that number. As a matter of fact, our newsletter, the Intelligent Marketer Intelligence Report, just fresh out of the press. And if you really need it, at the end of my presentation, scan the barcode, and then, we're going to give you a copy of that, right? And so for any investment, we need to consider return, liquidity, okay? Liquidity. So basically cash flow. And also we need to consider a safety, right? So it's, real estate is not for everybody. But, if you have a good liquidity and you're looking for a moderate return, not a crazy return, real estate is actually pretty good because it's safe, right? So if you're 20, 30-year-old and you have a limited liquidity or cash flow, real estate probably is not your first choice. Maybe stock and mutual fund would be your key focus. And but if you get into the wholesale, which is a different story. Wholesale, we're not going to call it equivalent to stock and mutual fund, but it is on the brink of, when you have limited liquidity, cash flow, but you're looking for higher return. Wholesale in real estate is definitely an awesome opportunity. Okay. But if you are already in retirement and near retirement, and you are really up to having all the funds to sustain your lifestyles and living, expenses, and you're looking for safety, safe returns, not a crazy returns, up and downs like the last couple of weeks, right? Then, bond, maybe your first choice, or some annuities would be your first choices. Okay. So, but if you don't care about the liquidity, you have great cash flow and you have great, emergency fund, you are really looking for moderate return and safety for your reinvestment, right? Either for estate transfer or for yourself. Real estate, regular, normal real estate investment would be something you should look into. All right. So hopefully that clears up some of these concepts. But if you're looking for more financial kind of concepts and the investment strategy, you're in the right place. All right. Not only today, but tomorrow in our open house at 11 a.m., we also have a great insight on how to consider the totality of your financial health and some of the elements of offerings from a Real Estate IQ we offer. And I would really love to have you there. So throughout my presentation is more a dialogue you and I have, but more is a dialogue between you, me, and the market, okay, and the data. So buckle your seatbelt. We're gonna give it a good ride, and hopefully there's some ideas popping up in your mind, and maybe some of the opportunities you are seeing through my slides. Maybe I'm not able to articulate. Maybe you are seeing it. Okay, put all these course aside. Let's get started. All right. So if you do have questions, Stevie is monitoring the room. So feel free to type in, okay, or raise your hand to ask a question. Feel free to stop me at any time. All right. Without further ado, let's get started. Let's look at this week's market. When I say market, we're really talking about the economy. As you may or may not know, Monday, the market was a little bit quiet, okay? Quiet doesn't necessarily mean that there is no movement. It's just that the economy is quiet because there's a lot of speeches given, right, by the Federal Reserve governors in different Federal Reserve banks, right? A lot of talks, actually from the morning all the way to the night, there were talks. Do they move the market? Well, in a second, we're going to look at it, okay? But Tuesday, which is interesting, right? We have optimism index, we have an employment cost index, we have an importation price index, right? It's a delayed report from December, but everybody was anxious for it, right? For a month, we're waiting on it. Then we looked at U.S. retail sales volumes. It's also a delayed report, but this is very anxiously waited for. And also the retail sales minus autos, okay, and the business inventory. So everything that happened on Tuesday really shaken and baked the market quite a bit, because a lot of the statistics and the numbers were anxiously waited for, but nobody was seeing the number. So let's look at the numbers. Just from this is the actual. Okay, so hold on. This is the actual number that reported on Tuesday. So stop looking at it. Okay, let's just look at the previous number and the forecast. So before Tuesday, they were thinking about the optimism index is relatively flat, right? And the employment cost is flat. Actually, importation price index, they don't know. It's a question mark. And the U.S. retail, they were thinking it's reducing, it's going down, okay? Going down from 0.6 and reducing to 0.4, which is not good news, right? And then the sales minus auto, they also look into like a reducing and probably not really optimistic. And they also look at the inventory. Inventory is reducing. So everything from sales and breaching sales, broker dealership perspective is actually negative. All right. So that's Tuesday. And going into Wednesday, we're talking about the employment report, unemployment rates. So if you look at the numbers without the actuals, just look at the forecast, right? They were thinking that employment rate is going up from 48,000 up to 55,000, right? And from an unemployment rate perspective, they think it's a flat, right? And hourly wages, they think is going to go up. Go up doesn't necessarily is good news for manufacturing or service industry. That means it's more expensive, right? So that's not good. All right, it's going up, but not good. And then they look at the hourly wages year over year. Oh, they think actually it's going to reduce. That's funny. So overall wages, the hourly wages is going up, right? But year over year is actually going down. So that means it's good news, even though the hourly wages is still going up, but it's reducing from the previous year. So that's good news, right? That's a good news. Those are all good news, right? Okay, that's Wednesday, all right? And the monthly federal budget, they were looking at the numbers being reduced, which is also a good news, right? Now, today is a Thursday. Well, time is already over because at 7:30 a.m. East Coast time, they already announced the initial jobless claim. So basically unemployment rate, right? And also they're talking about existing home sales. All right, forget about these numbers. Don't look at them yet, right? Just look at the forecast. The forecast was seeing that the jobless claim is reducing, which is a good news. And also the existing home sales is, well, not a good news, right? The existing home sales is reducing, as Steve already presented earlier. And we're going to look into that more into the details. So that's not good news. So that's up to today, all right, this morning. So now let's look at the actual numbers from Tuesday. The actual numbers from Tuesday is actually, if you look at the importation, the tax rate, the tax index, the price index is actually going up. Going up, is that good news? No, it's not good news. Well, the employment cost index, well, is actually pretty good. It goes down. Is that good news? Yes, it's good news. The optimistic index, that is reducing. So not really a good news, but it is minor, very minor. However, if you look at the retails, instead of reducing by 0.2%, it reduces by 0.6%. That's a pretty bad news. Okay, bad news. And also the sales minus autos, it actually reduced from a 4.4% instead of a 0.3, right? So it's pretty bad news. So as you can see, Tuesday, there would be some up and downs. And then Wednesday, let's look at the actuals, right? Instead of a 55,000 job created, actually the real number is 130,000. So that's a huge, huge good news. So you would anticipate the market move with it. Unemployment rate reduced instead of a flat. That's also a good news, right? The wages actually goes up. Okay, not really a good news, not really good news. However, because of the hourly wages year over year is a flat, so that is huge good news. So that means what? The inflation is not a concern by the employers. So with all these, you can anticipate that Wednesday, the overall stock market should have gone up, right? Now, let's look at it this morning. This morning, of course, I wish our conference is at 9 o'clock or even earlier, maybe 7:30, so we can see, we can predict, right? But if you look at the initial jobless claim, actually the number didn't go down. It's actually the number is higher than the anticipated number. However, it's hugely reduced from a 232. So it's a great news. It's a huge reduction. It's a huge good news, right? And the existing home sales, though, is not a good news. It's actually quite dramatically. It's almost 10% reduction. So it's not a good news. So it's a mixed message this morning. All right. So let's take a look of today's market. This week's market. So as you can see, today is a Thursday. Okay, is a Thursday, and then Wednesday and Tuesday a lot of excitement and anxieties build up. So the market went up, right? Significantly. And now, if we look at the year over today, overall, the S&P is the blue line over here in the middle. Okay, it went up and down. So overall, where are we now? I'm putting a red dots here. Where are we to today? Well, returning to the moderate, like ground zero. Okay, all excitement is gone, right? So somehow people are more realistic. However, if you look at the Russell 2000, which is the manufacturing, ever since this year, it just keep going up. It's already over 7%. It's just on and off. But if you look at NASDAQ, which is the yellow line, all these excitement has gone down. So since this year, we have seen NASDAQ, the some small index, and also the mutual fund industry actually going back zero and negative. Okay, so that is something that we got to be really, really careful. And the purple line is the industrial, the Dow Jones. Okay, we call it the Dow, and it actually went up 3-4%. So overall, if you look at what's going on, I want to teach you something to look for. Okay, so yes, the Nasdaq is negative, and a lot of anticipation was negative. However, I want you to look at this orange line in the middle. That is what I call the zero edge curve. Zero edge measures consumer or investors' psychology and their emotion. So when this line is on the positive side, that means for a relatively longer and middle term, the market will go up. Okay, so right now is a positive. Is a 3% a positive? Is that good news? Oh, absolutely. That means the overall psychological investment inclination is that this market is going to continue to grow, at least for an extended period of time. Why? Let me tell you. March, there will be some of the primary election primary started off. People are anxious about it, but be careful. I always said since last year, since actually 4 years ago, have been predicting the market, forecasting the market, right? By all means, our disclaimer is this is for your reference only. I'm not telling you to do what, okay? I'm just giving you the sign and reading from my economic background and my investment expertise, right? However, it's all at your own discretion. So by October, there will be some corrections. It could be even earlier if there is a black swan events going on. So be careful. Now, let's look at the next week's data. But before we do that, what's my point? So when we look at the economic data, right, forecast, you can predict where the stock market go, right? And that's what we're seeing. There is a correction. There is, benchmark, and there is a sentiment pretty much reflected on the stock market performances, as you can see. All right. Yeah. Okay. Cool. Let's look at what the Friday would be. So tomorrow. Okay. So be careful. Monday is actually President's Day. It's a holiday, public holiday, right? The market will be closed. So usually, because of the market close on Monday, many dealers would put their deals into the market by the end of today. So there will be some excitement today, up and downs. Primarily, is probably going up, right? However, we got to look at the numbers that will be disclosed tomorrow. All right, so let's look at them before we forecast. First, they're going to talk about consumer price index, CPI. Okay, CPI is not too bad compared to the beginning of the year, right? So that forecast is going to be flat, all right? CPI year over year is actually reducing, all right? What does that mean? So that means tomorrow morning, 7:30, if the East Coast announcement of the data is really around the 2.5% or even lower, there will be a huge jump in the market performance. People will have confidence. They will put more money into the stock market. Okay, that's what's going to happen, right? Otherwise, stock will reduce, but gold and silver will go up, right? Or even Bitcoin will go up. But then if you look at the core CPI is not just consumer. It's not only the consumer price index, but it's some of the specifics, right, in the CPI. So their forecast actually is going to go up. All right. Yeah, if it is going up, is that good news? Not really. Okay, not really. That would be a bad news. So let's look at the tomorrow's number at a 7:30. Be careful, it's a 7:30, not 8:30 here, because it's the East Coast. All right, it's the Wall Street number. And the year over year of the core CPI is actually forecast to reduce. Is that a good? It's pretty good. All right, we would have liked that to reduce year over year. And if that really happens, regardless the core CPI, the actual number, it will push the market up. Okay, so this is, what do you think, right? I mean, so forecast is forecast. What do you think? Are you paying more money for the consumer goods and then the groceries and all that? If you are feeling so tomorrow the core CPI probably will reduce. I'm sorry, if you're paying more, then the CPI probably will go up, right? Then the market will go down. So you can feel it. That's what the Warren Buffett always says. If you, as a consumer, is feeling the pain or feeling the relief, then the market will reflect that, right? Is that 100%? Not really, but primarily it's reflecting that. So I would highly suggest you to really test around, ask your colleagues, ask your peers, ask your families how they feel about the consumer price. Are they paying more money than last year? Are they paying less, right? How do they feel about it? For instance, gas is definitely reduced. That's part of the core CPI, right? Gas is significantly reduced from last year over year, right? Is that a positive thing? Absolutely. But what about eggs and vegetables? Are they reducing? Well, maybe flat, right? To be honest. So maybe it's not going to change much. So again, what I'm saying is just borrow the concept from the fundamental analysts or fundamental investors like Warren Buffett. You can forecast that. Okay, enough to be said. So tomorrow's message could be a mixed message. I would be very, very careful of putting too much in this today, all right, even though the market is low today, right? But remember, because Monday is a holiday, people will put more trades in, right, by the end of today, especially institutions. Now, let's look at the next month, next whole week. Next week is interesting, right? Monday is a holiday. Tuesday is going to announce the manufacturing survey. Manufacturing survey doesn't move the market that much, all right? It's not a big deal. But Wednesday, though, it's a lot of data, okay? We're talking about the building permits. Building permits is always a delayed report, okay? So it's going to report the November 2025 data because it's always 3 months to 6 months affecting the market. So does it move the market? Absolutely, all right? And the housing starts, right? And the building permits, and then durable goods and all that. So these are pretty solid, like primary market movers. However, I would caution you because they didn't forecast. Did you see that? So you really don't know how it moves. So we anticipate that Tuesday, the market will go up a little bit from, no movements to some movements. That's where it's going to move. And Monday is going to be quiet because nothing happens, right? And Wednesday, it depends on the 8:30 morning data. It could really drive down the performance a little bit. So, but it's all dependent on today. I mean, tomorrow, Friday's performance. Friday is a big mover. Okay. If a Friday is up, okay, Wednesday, regardless of what the forecast is going to adjust a little bit. If Friday's data, tomorrow's data is going down, then Wednesday, regardless, is going to make an adjustment go up a little bit. So hold on tightly. If you do options, if you do mutual funds, you have a more buffer. Okay. So let's look at the Thursday. Thursday, they're going to continue to report jobless data. All right. And the U.S. trade deficit. U.S. trade deficit is actually interesting. All right. It used to be negative. Negative means what? Negative means we actually buy more than sell. Because the current administration pushes for more, tariffs and U.S. goods, U.S. currency. So we may actually see less trade deficit. That means actually we buy less and we actually sell more. Could be, right? I'm not saying guaranteed. So so Thursday, the data will be very, very interesting to move and shake the market because it will affect the Friday market. And the Friday data is quite heavy loaded because it's almost end of February. That's why most of these data are reported. Okay, GDP data, it was last year it was a 4.4, right? I mean quarter four was 4.4. What about this year? Well, it's anticipated to actually go up because of the tariffs and all that. The GDP probably will get upgraded. Personal income, personal spending. Income is definitely going up, right? People all feel about it. Price index and all that. It may, shake and bake a little bit, making some adjustment, all pretty much on the positive side. So next Friday and the Thursday, we might see some positive data from the announcers from the Wall Street, from a different sector of an industry. All right. So next week, overall, may go up next week. This week's Friday, okay, it could be a mixed message, but in general, should go up a little bit. Okay. But then Wednesday, next week, the Wednesday will go down a little bit and then go up. So next week will be a small kind of a wavering. Now let's look at the commodities. The commodities, interesting enough, crude oil is still reducing. If you look at the overall, in a week, is actually reducing. Yearly, it went up. Okay, year over year, it reduces tremendously. Most of the, as you can see, gas and oil, crude oil, and all these have year over year are reducing, except for uranium. Oh, that's funny. What's going on here, right? Uranium actually went up 30%. Why? Well, because this Gulf War that is anticipated to happen, and also this enrichment that is happening in North Korea and also Iran. And of course, that's the political geopolitics that is affecting this pricing. Okay. I don't suggest you to buy uranium. Okay. But as the war is building up, do you know some of the long-range missiles and ballistic missiles actually their warheads are all uranium enriched? I don't know if you know that. So that means that uranium as a commodity will continuously go up, okay, as the war is approaching or anticipated, okay? But the most significant reduction is the gas pipes, and also gas, as you can see, all right? Gas is going down. But then if you look at another positive number, which is a teeny tiny, is this guy, is coal, okay? Coal price as commodity is going up year over year. But overall, though, lately it has been reducing. Yeah, coal, for those who don't know, coal is a industrial material, not only just for burning, right, and for fuel purposes. It actually has some of the substances that is much needed for construction, for industry needs. So the price is actually going up overall. Is an indication that the housing price, the raw material for housing, and for road constructions are going up. Okay, so it's affecting real estate, right? Okay, all right. Let's look at the commodities on the precious metals. As you all knew, that overall year over year, gold went up 70%, silver went up 150%. Right? I mean, I always encourage people to buy silver. So silver is needed when we are going electric, and when there is a war, and when there is more, consumer products, you need more silver, no doubt about it. Okay, gold is tightly related to semiconductor. Okay, as AI grows, AI goes up, more chips. Okay, and more chips, and gold will be consumed more, right? Gold always goes up. I mean, there are people, they're dumb enough, they just, hedge against the US dollar, against gold. Yeah, I mean, that's fine. But gold is more for consuming and for industry purposes. All right, I hope that y'all get that signal. Platinum also went up 100%. I want you to pay attention to platinum, okay? Platinum hasn't gone up for a long time. So when this is going up, platinum is also for industry consumptions, rarely for consumer consumption. Lithium went up 86%. That is for battery, for electricity, all that. Steel actually went down year over year. Actually has been down. So be careful when the war starts. Steel is going to go up. Look at the copper, right? Copper went up. Well, why copper? Well, war effort, okay, for consumptions too. So overall, silicon is actually went down. Silicon went down. Why? Well, when silicon went down, it will indicate that the chips will become more expensive. So when people are considering buying Intel, AMD, or NVIDIA stocks, this might be something for long term you should consider. Maybe consider options. It's safer, okay? Options instead of individual stocks, because the semiconductor sector, maybe you can buy a option against it, or consider some mutual funds, right? Especially hedged mutual funds, like QQQs, like some of the I got stuck. JP Morgan Chase mutual fund, right? The hedge against certain sectors that you may be able to consider. Okay, pretty heavy. All right. So now let's switch the topic a little bit. I hope this is feeding you some interesting information. Again, precious metal or commodity, it requires a lot of money, a lot of fundings. So usually is institutional behavior. It will affect the consumer side because people get just anxious about it. But really, if you are not trading commodity, this is irrelevant to you. However, there are ETFs, mutual funds, and other investment vehicles that are pegged against these commodities. For instance, I invested I'm just using myself as an example. Last year, beginning of the year, I anticipated, we actually talking about it here too, anticipated that the gold and the silver are going up constantly. So instead of buying gold or investing in gold and silver bullions and then the metals, I actually bought the ETFs of the gold and the silver. sticks, right? And I also invested in the gold miners. And these stocks, of course, went up significantly in the last hikings. And gold will go up and down, right? As you saw last week, it dropped like one day, dropped so much, right? A lot of people lost all the gains. But if you consider like the mining companies, it wouldn't affect it that much. You know what I'm saying? Or ETFs, you're buffered. Okay, now let's take a look of. Oh, by the way, silver went up $120. Now it's $77. It's huge. Okay, almost 50% cut right from the top. So if you invest in silver metal, you may be affected. But if you invest in the mining company, you are buffered. And if you invest in a commodity like index, you will be buffered more, safer, a lot safer. Okay, let's look at the treasury notes. So this is the indication of what? This is treasury notes, the basically U.S. bond and the U.S. treasury notes is always an indication of the stability of U.S. dollars, right? Right now, this is a month-to-month data. We are at a 4.763. All right. Is it a high? No, it's not high. It used to be 5.3. Okay. So it's reduced from the previous administration significantly. Okay. It's a reduced. So when they're talking about a reduce the yield, reduce the Federal Reserve, reduce, it's not interest. Okay. Interest is a second and third market concept. They only reduce the yield rate or yield. That's what the government talks about. And right now, 4.7 is relatively healthy, Okay, but if you look at now on the, in the lower right corner, I'm listing different period of these bonds, right? Monthly, weekly, and yearly. If you look at these, I'm sorry, I should have sorted by the periods, but anyhow, 30 is here. Okay, year over year is only up by 6%. Monthly, yeah, actually reduced. Okay, not 6%, 0.06%. Okay, so it's a 0.6 base point. But, the 0.06%, a 7% reduction monthly is almost nothing to to consumer. But for the industry, it's huge. It's huge. And if you look at this, the yield number, let's look at the yield numbers. Last year, when I talked about it, I said it's all backwards. What that means is the longer the term, actually the lower the yield rate, which is totally backward. Okay. And then that kind of a backward is a very unhealthy market, okay, economy. But now this administration has already straightened, kind of cleaned it up. So if you look at the 30 and the 20s, the yield is a 4.7, 10 years at 4.1 versus the 2 years, 7 years, they're 3 point something. So the longer you put money into the US bond, the notes, the more yield you're going to get. What does that mean? That means the cash supply is good. That means the government cash flow is healthy. Last year and the previous year, 2023, 2024, is completely unhealthy. And the government has been printing money, but the money is not in the circulation. A lot of you know that there are constantly, today the senator and the Congress are doing a lot of embezzlement analysis. For instance, Newsom, right? Newsom actually got a nonprofit organization, and he embezzled a lot of millions of dollars. Okay, and of course, some of the congressmen and women, primarily actually women, interesting. They embezzled a lot of public funds from, Small Business Administration (SBA) and those USAID funds under their kind of a nonprofit organization embezzlement. So all these are stopped since the beginning of this year, right? What does that mean? So that means the money printed out is not going into these black holes that you and I don't get to see. They are back into the market in circulations. So the previous 2 years, they print a lot of money. Okay, that's why the U.S. debt is so huge. But where the money goes, it went into those black holes. Now the money is in circulation. Is that healthy? Yes, super healthy. So I want you to have a confidence that what this economy is going is very, very healthy. I mean, put politics aside, right? I'm conservative, but put politics aside. This is a healthy economy overall, right? You should have a more confident that by the end of the year, we might be able to avoid this business downturn, the economy downturns, or the adjustment. Okay, enough to be said about a yield, all right? The mortgage is coming down, but it's also tipping up a little bit, just so you know. It went down since the beginning of the year, since the end of last year. But lately, it actually tipped it up a little bit. Now, last month, if you remember in our newsletter, in our intelligence report, it was a 6.10% 30-year mortgage. But now this month, it went up 0.1%. Okay, so basically, 0.1%. It's a 1 basis point. It's not huge, but it's still something. And I listed out all these building permits and all that. So don't worry, we're going to look at them section by section. We're going to look at the mortgages. We're going to look at the building permits and the buildings started. And we're going to look at the basically the the housing price. And we're going to look at all the parameters and the layoffs and the job stabilities, all that. Okay? Buckle your seatbelt. Continue. But I need to speed up. Okay, so building permits is picking up a little bit since the Q4. Okay, it's picking up. But if you look at this is a 5-year on the right side, the 5-year, we are still at the lowest point. Okay, compared to 2021 and the 2022. If we look at the 10 years, we actually higher than 2016, 2017. So what does that mean? Overall, we are on a healthy level of the building permits. Okay, if somebody says that the building permits is significantly higher, that's not true. Significantly lower, that's completely untrue, right? So the building permits, if you look at the 2025 Q4, is almost double of 2016. What does that mean? That means that by the end of this year and the next year, it's 6 months of a delay. So by this year, there are still tons of new houses coming out for sales. Okay, so what does that mean then? That means the new home sale will offer better mortgage, better price than existing home sales. Okay, so if you're buying a house, what is your choice? Buy new home or buy old home? Well, if you're in the long-term rentals or Airbnb, I would suggest you to consider new home buy. Buy new house and put them Airbnb, and the long-term rental is actually going to give you better cost ratio and then the revenue ratios, because the new home offers all these incentivizations. You can get a mortgage at as low as 3% from a builder. Because what? Because the builder got too much permits and they're stuck with the house, right? Inventories versus existing homes, and all these consumers, they're all, their mind got jacked up in the wrong way. They think their house is worth of the money that they're evaluated against, but actually they continue to reduce the price. I mean the value. So the building permits for residential permits is actually going down a little bit. Okay, so now I want you to be careful. So September, look at the hike, huge hike, right? 6% more building permits applied for in September. So by the rule of 6 months, by this time, these houses are pretty much should be built now. By another 6 months, which is mid of this year, these houses will be in the market. Okay, so humongous. All right. The housing started. October is a little bit, but then if you look at the 5-year period, the overall house started is not that high. Okay, in the last 5 years since COVID-19. However, if you compare it to previous, 10 years ago, 2016, we are almost double the size of how many houses are being built now or started now. So a lot of a house are being built. Okay. If you look at the mortgage origination, so that means people borrowing money to buy a house. Okay. So if you look at the number as of this year, yes. Well, since 2023, a lot of initiations, okay, dollar amount. If you look at the 10-year, it's actually quite low. 2020 and 2022, this period of time, significant mortgage origination. What does that mean? Well, it means a lot of people borrow money to buy a house. Okay. But why? Well, because they got a hugely low mortgage interest rate. 2 point something, right? Many houses were on the mortgage of a 2 point something. Compared to the inflation rate, you're basically, the banks are giving you money for free. Do you know that? So for those who are still holding 2 point something % mortgage rate, don't sell the house. Do owner's finance, okay? Do owner's finance, right? And that way you can get really good deals on the pricings and on the market value of your house. Okay, so if you are looking for solutions like that, what Steve mentioned about the sub 2 is an opportunity. Well, owner's finance is a great opportunity to break a deal. All right, so all right, keep going. New home sales is tremendously high. I already said that. Let's skip. Existing home sales is really low. Okay, 10 years lowest. Okay, is it going to continue on? Yes. So what does that indicate then? What do they do with the existing homes when people want to buy a new house? Well, they're actually going to do Airbnb and the long-term rentals. So they're going to buy a new home and lease out their existing homes. So there will be more and more long-term, landlords in the market. Is it healthy? It's very healthy for the grown-up generations, but it's extremely unhealthy for the rental business. So if you're in the long-term rental, maybe you want to change your strategy a little bit. Okay. Existing home, why the sales is so low? Because the price is too high. Okay, it's too high. It's 2-3 times higher than it's supposed to be. So that's why to buy a home, it's highly recommended to go buy a new home and put it in the market for long-term rentals and short-term rentals. Is actually better. But now, pause a second. Can you buy a new home and do Airbnb? The chances are very low because most of the city ordinance have already banned Airbnb. So maybe long-term rentals. Okay. Okay. So the price to rent ratio. What does this mean? So if I have to find a home to live in, is it good for me to buy a house or to rent a home? Well, this chart is telling you that if I buy a home, I ended up paying 130% more than rental. So this is going to be a renting season for a longer period of time. And, as a matter of fact, renting is actually really good. But for those who have already had their house paid off or whatever, long-term rental is actually not bad at all. Get into the market. You can bargain. Okay. So, I don't have time to talk about the strategy. But anyway, if you are interested, come to our Wednesday and the Thursday working sessions. The workshop, we're going to give you the tips on how to do the business. But anyway, let's keep going. I still got some information. Total housing in inventory is still pretty high. Okay, still pretty high. The overall consumer confidence is picking up since last year. Yeah, the new government, the new administration, new strategies, the Doge, everything is giving us a lot of confidence, right? So the first year, especially from the 2023, 2022, a lot of a bad taste, has been corrected since last year. So a lot of corrections, a lot of good adjustment, continue to adjust. Layoff. Well, I'm just giving you a snapshot of all the recent layoffs since the Q4 of last year. As you can see, San Francisco Bay Area, the so-called Silicon Valley area, right? Tons of layoffs, right? HP, Synopsys, Meta, Amazon is laying off over 30,000 people since October last year, right? The retail. Why? Well, they're using drones. They're using AIs, right? So where you should invest in? Maybe you should consider drone business. Anything related to drones. You probably want to put a little bit of bet on it, okay? Rivian in Los Angeles, that's the only Los Angeles one, is laying off 600 people. This is a startup company making electrical car. They make trucks and all that. Not that good, okay? But they're laying off people. That means they're struggling. Electrical car industry, after all these government subsidies in 2020, 2022, and all the way to 2024, is gone, right? All these stealing the money from the government is gone. So that's why the electrical car business is winding down, right? I'm not going to put the money into the electrical car at this moment, right? Some of the consumer, like a Pinterest, that is a completely online platform, .com thing, is reducing 700 people. That's a 15% reduction of their work. It's troublesome. So pretty much what we're seeing is, the consumer, the social media, some of these industries are affected dramatically lately. But Broadcom is a chip company, by the way. And Zillow, of course, is a data company. They're laying off as well. That's the latest, greatest news. Okay, I mean, not the greatest, but it's the latest news. And also Workday is also a kind of online platform, HR type of labor broker company. They're laying off people as well. So as you can see, where to put your money. That's why the NASDAQ is going down, because a lot of these startup or the post-startup companies are reducing resources, right? Saving a lot of money. On this list, though, Oracle is not listed. But I want you to know that Oracle is laying off a lot of people as well. And several other companies like Verizon, they're laying off people. I wonder where they are. So I'm going to wrap it up by telling you that we're going to continue to give you the market update and then the economy updates. And hopefully all these updates are giving you a good sense of where you should put your money and put your mind on. All right. And I encourage you to continue to, chat with us, join us in investment discussions, because we felt that it's not only real estate that people should care about. They need to know a holistic plan for their household, for their families, right? Instead of just putting all the money into one basket. Hopefully that makes sense. All right. Hey, Steve, I think we can wrap up for today, buddy. You still there? Oh, okay. It's all in my hands. I guess that's it. So I'm civil engineer. Thank you, Grayson. You said develop a lot of data centers, both from structure chips and AI. You mentioned chips, and I hear the term chips float around this. Okay, just so you know, Grayson, one of my PhDs when I studied at the graduate school was on semiconductor. Okay, so I know a lot about semiconductor industry, wafer factories, and I saw the up and downs since the beginning of end of the 90s in the semiconductor industry. So that's why I'm speaking about it. As a matter of fact, one of my thesis is on ASIC. Okay, if you heard about it, which is really really hot when people talk about AI. So let me give you a taste on that. AI used to be just a algorithm based, but the most attention should be put on chip based, hardwired AI and security, cybersecurity. Okay, so this area is going to get really, really hot, right? Are you familiar with the stocks that fall under these categories, like a chip flow? Well, I mean, again, I already mentioned um, Nvidia is already old story. So look at the new development that Apple and Tesla is pursuing right now. So they're talking about a cyberspace hardware chips to be developed by semiconductor companies to wire in AI. Like Nvidia is already developing that, right? But there are other companies, AMD's, all of them are developing hardwired AI. Okay, hardwired cybersecurity. So pay attention to that. I think that's general category. You can't go wrong with it, right? Again, it's not a recommendation for buying stocks or whatever. It's out of your discretion. However, this is the area only experts know. All right. So, but anyway, yes, great question. Great question. Data center is interesting. All right. Data center consumes a lot of electricity, consumes not a human, but it consumes a lot of chips. Chips is what? Gold, copper, and silver. All right. Because he sinks. The more the data centers they're going to build, the more silver they need. Silver is the best conductor for heat. All right. Okay. Good enough. I think that's it, folks, for today. Let's just keep it this way. Next week, I'll fix my camera. I don't know what the heck's going on with my camera. But next time, we're going to see face to face. All right. Hopefully, you enjoyed the information and also pay attention to the market movements. And we're going to validate our forecast. How about that? And enjoy investment. And don't forget about our tomorrow's open house, talking about other aspects of it. And have a good day. And God bless everybody. We'll see each other next week.